Yeah, Friday. What's up, everybody? Friday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. I hope everybody had an amazing Thursday, as we're about to do what we do each and every day, taking a look at some of our main futures markets this morning, S&P, NASDAQ, crude oil, and gold, as well as our stock of the day. If you are a new subscriber, click the subscribe button, hit the notification bell. Make sure that you put a like for me. I'd appreciate that. That's a big one. And then if there's a stock that you want me to see analyze, put that in the comment section down below. I love to get stocks from you guys. Put it in the comment section down below. Love to get your thoughts and your opinions. But without further ado, let's talk about the big picture. So in today's big picture, we are down again this morning in the pre-market. S&P's down 15 points. NASDAQ's down 192. Let's open that up and see what we've got. There's a number of lines on here. I'm going to delete some of these as I want to, take a minute to kind of see where we are on a couple of these positions. These are levels that were our resistance points that still could come into play. Now, the one that I was looking at yesterday was this one right here, right around 39.11, because it was an old area of resistance. Old resistance oftentimes acts as new support. So we'll see if we get a little bit of a bounce off of this. In reality, this could be another opportunity on a breakdown trade. So as I'm going to kind of remove some of these levels here that we already hit that demand level and rallied up, just cleaning up my charts, we're going to put a line across that high because we did come back and basically retest the all-time high. So I am going to keep a line across this all-time high so we know where that turning point would be, and that would be a basing opportunity right in there. Our 4-hour trend has definitely gone back to the upside. Excuse me, not the daily, the 4-hour. 4-hour trend has definitely gone back to the upside. We're seeing higher swing highs, higher swing lows, and we reversed off of this level down here. Where would be our next opportunity then to get long? Well, realistically, it would be bouncing off of this area of support on this pullback. And in the 1-hour chart, that seems to look like a valid and decent opportunity. If it doesn't hold, you actually, in my mind, have a breakdown. And your next quality area of demand is here. All right, to me, that's your next quality area of demand. If we break down below 3,900, look for price to make it to 38.77, where I think you could have an opportunity in that point to get long. NASDAQ. We had a really nice supply level get tested. So this was our supply level from our live trade room. That level got hit. We got a very nice strong move away from that level as we came back and retested this area. Our demand level the prior day was a nice reversal off of this zone. So we got two really nice moves off of both demand and supply. And so now both of those levels are used up, so we've got to look for our next opportunity. Now when I look at the NASDAQ is significantly weaker than the S&P, significantly. And so when I'm looking at a potential short opportunity, I've got to look towards the NASDAQ. And when I look towards the NASDAQ for a potential short opportunity, my eye immediately goes here. That's a wick over wick below a pivot at an area where in the past we were the origin of a very strong move down. Now, this is our Globex move down. And so if we bounce up from there, which by the way would make sense that we can bounce up from there because the S&P is sitting on support. Right? S&P sitting on support could definitely get us a bounce back up to there, but the NASDAQ is definitely the one that I'm more likely to be short on. I want to take a look real quick, and I know we don't normally look at this one in the morning, but it's the Russell, because the Russell is normally going to be the one that leads us up out of this. And the Russell, if we look at this, came to a brand new all-time high. We did break out above that high in the Russell. So those of you that have been paying attention know that we talk about the Russell as kind of leading us out, and that would be the one that I think is the best opportunity for a long on a pullback would be right back in this area here, and that lines up with the S&P level. Now, so shifting gears, going to crude oil, which is our commodities market of choice. We had a nice bounce off of our demand level in crude, didn't get below our pivot or even below the leg-in candle, and so a nice move away from there on the demand zone. And so then we came to supply, and then the market hit the supply level, and 1, 2, 3, 4, 5, 6 candles later, following our rule, telling us, hey, this isn't working, get out of Dodge. Now, by the way, why didn't it work? And the reason it didn't work is because of this bit of basing here, this kiss of death before the level. That's okay. it now sets us up for a better opportunity. And I think that better opportunity could just be a breakout above this area here. So with a bit of basing, breakout exists. I don't really like this confirmation short any longer because my momentum still says that there's a better probability that we make it back up to 70, right? $70 a barrel oil is at least where I would say that we've got the probability to make it to. And then last, let's take a look at gold. So looking at gold, we had talked about a possible breakout out of this level here. If we got the breakout, then we had a target area right up into this area of supply. So we got base, 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 base. Price gave us the breakout, came right to our target area, and then moved away. So that trade from a breakout area perspective worked out extremely well. Now, on a retest area, let me remove these levels here. On a retest area, we came back to the 15-minute level, but notice, what did we do there in front of the 15-minute level? We had basing in front of the level. The kiss of death is basing in front of a level. And so that's less than a 1-to-1 reward to risk in front of the level that we were basing, so no surprise that we cut right through it. We sliced right through it like the proverbial knife through butter. And so now what am I looking at? Well, on the 1-hour chart, I'm going to come back up to the origin of that drop, which would be the basing before that breakdown. So those are our four big picture markets. I will post that grid inside of the Traders Army Trade worksheet for today. So those of you that are members at tradersarmy.com have access to the lines and the levels that we looked at. But for now, let's go take a look at our stock of the day. So with the shadow of the bear lurking overhead, our stock of the day is going to be a bearish stock. And we're going to look at a bearish stock because I think that this is setting up for price to come back down. And this is Checkpoint Software, CHKP. Now, CHKP just announced earnings. Their earnings were actually pretty good, but notice that we gapped down on earnings. We gapped down hard on earnings, and it became a gap and go momentum play. So for those of you that play the momentum plays, this was a very strong gap and go momentum play. For a number of you, you say, well, I'll get in on the gap fill. Well, what if the gap fill doesn't come? So you've got to look for a good reason to get in and rejoin the short. Now, we're bouncing off of this little area of demand here, although we've not quite made it all the way to the bottom. I think that you could see price make it all the way down to 90, ultimately as a longer-term target. And look at the candlestick that we put in yesterday. Good lordy, that's a candlestick that we like to work off of as traders, right? That is, prices opened here. Right, we shot up, and then we came down and closed on the low, and we gapped up. This morning, it looks like our pre-market trading that we're going to wind up gapping down this morning in pre-market, and if we do that, you could have a setup for a true gap and go, especially if we get lower than the prior day's low. This is a strong reversal candlestick pattern. Now, makes it for your stop to be pretty easy. It goes above the high of yesterday. Your entry goes below the low of yesterday, and your target, you'd start off with a 2-to-1 reward to risk for your first target. My first target's typically going to be that 2-to-1. So if that distance is my risk, there's a 1-to-1, and there's a 2-to-1. My first target is going to be right down here at about 110.44. So that's our setup in this position. Entry, stop is in red, target is in green. Now, by the way, does that mean I have to take my entire position off at target 1? No, it does not, but I should take a little bit of money off the table, or at least move my stop to break even, because it's going to be a much better tradable opportunity. But this would be, in my mind, your short opportunity in Checkpoint Software. I think it's a swing trade, going to take a couple of days to hit its target, but very well worth it. So we're heading into the weekend. Remember our rules on the weekend. On the weekends, we do not hold futures positions unless we're prepared to handle gap risk. So make sure that you understand how to handle gap risk and understand a little bit about options on futures. If you are part of our free preview week at tradersarmy.com, we look forward to seeing you in our live trade room on Sunday night. It'll be the last one, so make sure you get in and become a regular member. Use the promo code TRADER60 for 60% off your first month. All right, everybody, have a great weekend. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.